Hey everyone, Paul here. I want to take a look at Desktop Metal, ticker DM, and this stock has been up a lot in the last 6 months. If even look at this on a year-to-date basis, this stock is up 88%, and at its peak over here, in early February, it was actually at one point up over 100%, so it had more than doubled in 2021. So again, this stock has really been on the move. We can see that from looking at the graph that it's like there's a lot of positive momentum here. It's really a beautiful graph, but part of the question is, has it moved up too fast too soon? Is there still more room to run in this stock? And I wanted to share my thoughts with this because when we talk about some of these things, there have been a lot of stocks that have kind of run way beyond their fundamentals and things of that nature. Depending on how you view it, Tesla could certainly be an example like that. But I think there are some stocks out there that there's enough excitement where, again, they can have lofty valuations just because investors or speculators fall in love with what the industry could become. And I think 3D printing and Desktop Metal could actually be one of those companies. So let's take a look at some of the valuation trends here. So let's take a look at some things that might have to happen to justify this stock being able to double or to continue to grow from here. And so first of all, the share price is at about $30.49. That gives them a market cap of nearly $7 billion, currently at $6.9 billion. And there has been some share dilution, and they're currently losing money, kind of a key thing to keep in mind. And a lot of times when companies are losing money, if they need to issue shares in the future to kind of fund operations, that's something we should certainly keep in mind. So I'm going to say, well, first of all, take a look at what if they just have the current shares outstanding and what if they need to dilute up to 50%. So when we're looking at what the results could be in 2030, those are two things to keep in mind. But right now, Desktop Metal, they do actually have some revenue. It's about 20 something million, still pretty small, but the company has provided some guidance that by 2022 they could be up to about 166 million, or just a little shy of that number, and they're expected to grow at a really, really brisk rate. And so essentially by 2026 there is reason to believe that they could be eclipsing $1 billion in revenue for the first time. And if they start to stabilize, even if they're starting to grow by 30%, which is still a huge growth rate, but I don't think entirely unattainable for the breadth of services and industries that they potentially could be a part of, and we'll get into that in a second here. But if we see these growth rates come to fruition by 2030, the revenue will be about $3.5 billion. And that being said, I think that there would still be a ton of room for growth in 2030 for 3D printing in general, and certainly if Desktop Metal can be growing along with these rates, if they're able to have success and be one of the winners, I think investors would still be willing to pay a lot for those sales. So I'm going to say that in 2030, if they have this $3.5 billion that they're able to ramp up to, I'm going to say that investors are going to pay about 8 times sales. Again, I think that that to me could still make sense, right? And that would leave them with a market cap of about 28 billion at that time. Okay, so and we look at that on present value terms, we can take a look and say, okay, if they don't really have any kind of meaningful dilution, that would actually put them at about $50, $52 discounted back to today's dollars, discounting this at 10%. If they have the dilution and you're saying, hey, there's 50% more shares outstanding, so everybody's going to be a little diluted there, you would still say that they'd be worth about $35 a share in today's dollars. So kind of somewhere in this range. I think, I don't think it's really going to be the case that maybe they have the full 50% dilution. I don't think there's going to be no dilution. So I think it's really kind of going to be somewhere in the middle here. But I think based on some fundamentals that, I could really get to an argument that Desktop Metal, could actually be worth about $35 a share. And here's, again, one of the interesting things. A lot of companies get very disconnected from the fundamentals because they fall in love with the growth story. So that being said, I personally think that this thing could, go up to $50 a share, $60 a share within the next 12 months, just because the market has become really kind of bubbly in some areas. And there's, again, I think when there's an exciting story and a huge growing industry, I think that, we have some ripe conditions, for positive momentum to be playing out. So again, a speculative name, but this is something that I think could be interesting, if you're looking for something to trade or you're looking for something higher risk that could have some good upside. I personally think that Desktop Metal could have some more room to run here. So let's get into a little bit more about the business model, just a couple things about the industry growth and what they actually are getting into. So let's go take a look at that. So when we're talking about the valuation, modeling out some really strong growth, I mean, a part of that again is just the fact that this industry is set to explode. So there's some research here indicating that the additive manufacturing, which is just another kind of fancier way to talk about 3D printing, is expected to grow by more than 10x over the next decade. I mean, this is supposed to be an industry by 2030 that could be all the way up to 146 billion dollars. And so again, if Desktop Metal is able to get 3.5 billion out of this, out of a total market of 146, that's still saying that they don't have by any means an overwhelming share of the market. So I think that makes it a little bit more realistic. That again, if they're able to be a winner in the space, which is by no means guaranteed, right? Because there's a lot a lot still developing here, and they might be one of the front runners today, but it doesn't mean they're going to be next year. It doesn't mean they're going to be next month. So a lot of moving parts to this, but again, a lot to like about the industry. Another thing to like about Desktop Metal is when you look at them, they want to be able to expand into a lot of different industries. So the fact that they actually have on the board of directors, they have Google represented, they have Ford, they have GE, so they have some big industrial players that are on the board that I think is going to help people to guide, as they start to disrupt some of these industries and as they start to partner with some of these companies. So again, I think that that's a really good sign that the board of directors is a pretty solid bench of experience from other big companies. And we talk about, again, so the board of directors and having those relationships, and Ford and BMW are already investors that are partnering with Desktop Metal to be able to use this technology. So again, one of the cool things about 3D printing is that it kind of started off, really talking about the excitement being around prototypes and things of that nature, but it's really moving into, production at scale and saying that there's going to be mass production based on 3D printing. So that's really revolutionary, and again, that's what's driving a lot of excitement in the marketplace right now. Continuing to talk about the different areas that they can operate in. I mean, they're anything from dental, where they have, some runways for growth, again, automotive, entertainment, but the list of companies that they're developing, partnerships with, from Amazon, Mattel, Ford, Smile Direct Club. I mean, there's a lot of big recognizable names on here that they are building relationships with that, again, could just generate a huge market opportunity for them. And if anything, though, I think one of the bigger risks when you look at a portfolio like this is almost because they can focus, anywhere or in so many places that maybe, they run the risk of not getting, too specific into any one industry, right? So maybe they spread themselves too thin, something to be aware of, but just as a starting point, they have a lot of potential that they can go into. And the fact that they're developing these relationships with these names is very encouraging for Desktop Metal. So I wanted to share my thoughts with this, why I think Desktop Metal is actually, has a lot of potential as an investment, even though it has ran up a lot. Again, I think that there's going to be a lot of excitement around this. Certainly something that you would have to really keep an eye on. But again, it's on my watch list. I think if I get a good opportunity to get into this thing, if it goes back down, let's say, low mid-20s, I certainly would be interested in taking a speculative position. As always, make sure that it actually aligns with something that fits in your portfolio, that you're doing your own research, and I will talk to you guys next video.